the general theme is that markets were up. It was a great month for May after a bit of a challenging prior month. Good afternoon. Hope you're doing well and had a great Memorial weekend. We have a little bit of a shorter week here in trading, but a lot to cover between some updated GDP figures, as well as a really good question of the week. What we're going to do actually is break down a little bit the month of May and kind of look at the scoreboard for the markets. So first thing to touch on is obviously it was a bit shorter week here. Monday was obviously Memorial Day, so we have a bit shorter week in trading. But nonetheless, we'll definitely get into some of the details for what was addressed here or what data points did come out this week. Before we jump in, I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out some of the noise along the way. So the first thing that I want to touch on, and again, it was a little bit lighter week in terms of data, but the first thing I do want to touch on is consumer confidence came out on Tuesday. And what I will share is just a general takeaway that consumer confidence was much higher than expected and actually pretty significant. So consumers are confident. And I think, obviously this kind of ebbs and flows with market swings and what's going on. We're certainly seeing that confidence has kind of began to, creep its way back in. And whether that, sustains or what happens next, obviously we'll wait and see. But nonetheless, the consumer confidence number on Tuesday was stronger than expected. But we also had GDP revisions come out. So this would be the second iteration of the GDP numbers here that came out today, actually. And GDP revisions came in actually even lower than the first read. So the reason I wanted to spend some time here is because for those who do tune in weekly, you might remember, I think it was about a month or so ago that we got the first GDP number. And that number was it was okay, but it was definitely showing some signs of slowing. So the first read came in at 1.6% for GDP growth. This second read came in actually revised down to 1.3%. So the reason I'm spending some time here is because you may remember when this first read came out, what happened was that there was a ton of media and news stories and all the above piling in on this idea of stagflation. And for those who, again, tune in weekly, you probably have heard me share this kind of story multiple times, but stagflation is basically a phenomenon of higher inflation and slower growth. So in other words, higher inflation reads and slower GDP, lower GDP numbers. And so when we had that first read come out, it certainly sparked a little bit of concern, I guess I would say. Now, I would argue that maybe that's not fully justified. A slower read one in and of itself, and then inflation at 4% isn't enough to justify or suggest that we're going into a stagflation period. But it certainly got some people talking and people thinking, and I think it is a fair concern, just maybe not yet. But anyways, the importance of this is that the number did come down even further from the original 1.6% read. So we'll see where this kind of shakes up, and then also obviously what Q2 actually looks like, as we get further into the summer months there. So we'll see where we land here as we get a little further into the year. But it was an important thing that I feel like has not really been covered today, and I think is very relevant. But what I want to touch on before we jump into the question of the week is that next week we do get back into a flurry of data. So we have income, we have spending, we have inflation. All of that is tomorrow. So we have a lot to cover there next week. And all that is right before wrapping up May and jumping into June, kicking off Jobs Week there next week as well. So a lot on the plate here to come. But before we wrap up for this last, May weekly update, we have a really good question of the week, really touching on the market review, let's call it, in May. So kind of a quick scoreboard of where things stand for the month of May. Now, I will share that this is the numbers that I will kind of share here are going to be at the end of market close on Friday before the holiday. So markets have pulled back a little bit here so far this week. So bear with me a little bit. Some of these numbers might be a bit, a bit behind some of the most recent data. But nonetheless, what I will share is that the general theme is that markets were up. It was a great month for May after a bit of a challenging prior month. Depending on where you looked, markets were up, close to 4%-ish. Now, obviously, there's different components of that. And certainly we saw a lot of the tech side of things really pick up here again this last month. And so what's happened is, we'll see where we close, I guess, on Friday, but we're almost back to where we were prior to kind of that April pullback. So it's good to see that we've picked things back up. We got a little bit of momentum to the upside. We actually crossed over the highs from earlier this year, but over, what you can see on the screen here, it looks red. Over the past couple of days, unfortunately, we have pulled back a little bit. So we're pretty much in line with some of those highs earlier this year. The other thing to highlight is the bond market. So even during that period, the bond market was up, let's call it a little under 2% when you look at the Bloomberg Ag. Now that said, the yields have picked up significantly in these last couple of days as well. So the challenge is that, what we're seeing with the stock and the bond market is the same as it's kind of been, where they're kind of moving in lockstep. So they're moving in the same direction at given times. When yields go up, bond prices come down. And so what we've seen the last couple of days is bonds have kind of gotten hit a little bit here again. But nonetheless, I thought that might be helpful just to kind of share a quick summary version of where things stand. Again, good month in the markets in terms of, let's say all around, really. But certainly looking at the S&P and some international markets, again, the bond market might end up a little closer to flat when all is said and done, but nonetheless strong there. And then commodities, are up as well during the past month. So all tides seem to be rising right now. We'll certainly keep you posted as we get through June, but I really appreciate the thought here for this last kind of session in May. And we'll look forward to seeing you next Thursday at 3, where we'll talk a lot about, inflation, income, spending, and some of the early signs around the jobs reports. So in the meantime, have a great weekend, and we'll see you next Thursday at 3.